All right, we're going to talk about 6 market leaders ready to drop. This is an important segment, I believe, because I'm going to give you some lessons on cycle analysis, looking at these 6 big cap stocks. And what's important about these is that while the market is making new highs, these stocks are breaking down. They're in a place where they are likely to get pretty sizable drops in the next 4 to 8 weeks. We call that pretty good downside risk. So I'm going to demonstrate the cycle analysis on these stocks. And if what I believe is coming in these stocks does come true, then you know when you see which stocks these are, how they're going to weigh on the market. We call these right now on an intermediate basis strong sell, as you can see right there. What are these 6 stocks that are strong sells, and how do we do this analysis? We'll take a look at this. This is Square. So what you're looking at is a chart with cycle analysis on it. Square did phenomenally well after the COVID hit because all of those online charges that were being done, many of them through Square, they really did very well as far as the stock and the anticipation of earnings going up based on the stay-at-home, work-at-home environment. The stocks that did well in this category that were online sellers like Etsy drove to the upside with all of these. But then something changed and a correction was likely. We talked about the stocks that we thought had a lot of risk months ago, and the vast majority of those stocks had very large declines. Now a pretty significant top has been made in Square, and I'm going to show you why. So the first thing I want you to see is that we're looking at a 10-year weekly. Now I zoomed in this back in here that we're only going to look in here over these last couple of years to get an idea of the cycle analysis. What is cycle analysis? Cycle analysis is the rhythmic motion in the stock market, in any market, where you're looking at phases where the stock gets bought. We call it a rising phase, phases where the stock peaks, phase where the stock declines, a declining phase, and phases where it begins to rally again in the new rising phase. This cycle analysis I have studied since 1975 and have done a workshop on it. You can learn more about that by going to learn about our cycle analysis workshop at askSlim.com. Go to that go to the workshop tab, and you'll be able to see 2 workshops that we have there. So you can see in here that this upward movement was extremely strong. These average cycle lengths are 18 weeks. That's a cyclical period of 18 weeks, where the average advance and decline bottoms every 18 weeks on average. Some are longer, some are shorter. There is variance between them, and it's our job to understand. When you get rising patterns like this, where the highs and lows are much higher, that makes your uptrend. This is the 13-week moving average, and it often follows that. And when it moves very far from these moving averages, the 13 or the 34-week moving average, it often comes right back down to it, as you can see right here, as the 34-week is often a magnet. Then we broke down in here, and we made a double top. So this cycle was the last part of the rally, and then the next rising phase was very short. It only rallied into the 5th week. You can see these were much longer, as long as 15, 16 weeks on the upside, but this one only rallied to the 5th week and made that double top. When it came down, it broke the key low right over here, and this low here is on the 10th week. So if the average cycle is 18 weeks to the next low, well, let's say it's 16 to 20 weeks, then you would expect that here we are 13 weeks off of this last low, that the next 3 to, say, 8 weeks are going to be down below this level. So our targets in here are at very best getting down under 190 in the next 3, 4, 8 weeks, and potentially down here to this support here at about under 160. So you can see in here how we do these projections. This is the low timing range, plus or minus a few weeks from the ideal, and that's how we project it down in here. we create the supports and resistances through what we call swing high, swing low analysis. If you become a level 2 or higher member, you can get our complete library, and we have some videos in there on how to create these support and resistance areas. Look how it hits the supports and goes up in positive configurations, and look how here it's coming up and stalling at the resistance level. In addition to that, we have our momentum condition in here, which is now negative right over here, which is called our reversal scout. We use the reversal scout and we use the slim ribbon or slim ribbon PO as our very, very powerful indicators that tell us about momentum conditions. Right now, the momentum condition in here is negative. The cyclical configuration is negative as you've come down here to the 10th week back to this low, and the likelihood of a decline over these next several weeks down to 190 or down to under 160 is very high. The probability is 70–80% for that decline. That is a very negative condition. And with being that Square was one of the market leaders, this stock, you can see, and very widely followed, is likely to put some downside force in the stock market. So I wanted to show you that, the cycle analysis, the rhythms in the market, the upward conditions, and again, look at these green arrows here, upward cycle, positive cycle, creating a negative cycle and the likelihood of further decline. This shows you the energetic shift as the dominant energy is on the upside. Now the dominant energy comes to the downside. This is a big evening star. This is a shooting star. All of that telling you there's resistance at those areas and the likelihood of moving down and failing from this resistance area. Square, in our opinion, is a strong sell right now for intermediate traders. Now let's take a look at the other stocks. I'll go a little faster on that because I want you to see these important key stocks. The next one we're going to do is Nike, NKE, and then we'll do Netflix, and you'll get the idea. A similar condition in here, actually a little bit worse in some ways, because you can see the positive cycles moving up, the double top that formed, but then it actually broke down under those supports and get a rally into the resistance zone. Our target for Nike is 120, best case, with a potential of coming down to about 115. Over when? Over these next approximately 4 to 8 weeks. So when I show you my stock market analysis, where I will talk about the downside risk in the market through early August, this is very much in alignment with that. Take a look at the next one in here, and that is NFLX. And here is the Netflix chart right over here. You see the cyclical patterns. They are very clear. You can see the rhythms right in here. And the next low is due right here from early July into mid-August. The next 4 to 8 weeks on the downside. The probability of getting under this level very high, 475. Well, that's only 14 points away. Let's look for 440 on this stock in the next 4 to 8 weeks. And look at the big head and shoulders that's actually forming in here. If I were to look at the measurement on that head and shoulders, that would be approximately 100 points from a breakdown, which takes you into the low 400s. That actually might be a possibility, as Netflix pattern is really breaking down in here, and we look for these lower prices just to start now over these next 4 to 8 weeks. First Solar, FSLR, is the next one we're going to look at. And First Solar is a stock that we put a trade idea up on. I'm assuming that Arvie's going to put some trade ideas up on some of these other stocks too. And this one you can see about 4 to 8 weeks into August. It's in the resistance zone. It has a breakdown in here. Excuse me. The cyclical patterns that we're looking at right in here are 2 of them. First of all, the group pattern is TAN, T-A-N. That is the ETF for the solar group. And then First Solar's pattern is right in here. And this has a minor cycle and a dominant cycle that you see in here. Look at how the minor cycle bottomed here below this slightly. You're getting in this rising phase right in here. Once it peaks, all of these come down together and you get slammed below this level. We're going to look for a very reasonable price here around this intermediate 61.8. We'll call it just about 64 in there. Very high probability that First Solar is going to move down pretty sharply. Two more to go in these category of widely followeds that are likely to move the market down. Well, maybe First Solar is not that widely followed, but certainly Twitter is. Twitter's got problems in here. First of all, their model just is failing. They have the hardest time figuring out how to get a model that they can monetize in any significant way. This stock has got a very bad breakdown. So you see the cycle low right here. You can see the timing right over here. What is this? It breaks down right over here in the 5th week, where it has all of this time to fall. So what is this right in here? This is simply a bear flag coming up to resistance right over here, right around that 13 week. And the likelihood of it moving down to 50 and below, maybe even down to 43 in this looks like about 5 to 10 weeks when I look at this. It goes out a little bit further to mid to late August potentially. Twitter looking really negative to me. Another stock that could help push the market down in this time that we think there is risk. And now this exciting one, TSLA. There are so many followers in here. ARK is so involved in this stock as they're loaded to the gills. They're looking for some thousands and thousands in here. And I've been projecting the stock under 500 and now projecting it potentially down to about 450 right now. This is another stock that made a cyclical low and then after making that low right over here, tested the low. So it's rising in here and can't quite get into that sell zone right there and looking like this decline into early to mid-August. So we're looking again at about maybe 4 or 5 to all the way 8, 9 weeks on the downside. This level over here is about a 90% probability of getting taken out. 540, these down here 70 to 80%. Because of this negative configuration here. Let's just target this price down over here around 480 on the downside. 540, very probable. 480 likely in here. Their sales in China collapsed. They got a rebound in there on it, but their Model S Plaid was released. That rollout not helping at all. Really, the stock barely getting an uptick on that. What a car that is, though. It's $131,000 is the estimated price on that. It's got a 380-mile range, 0 to 60 in about 2 seconds, maybe just under 2 seconds. What a monster. Faster than a Porsche, and they say safer than a Volvo. But $131,000 is a pretty limited market. We don't think that it's going to save this stock from getting down into this area around 500 or a little bit lower. So we see this stock is a significant risk. So these are the 6 market leaders that we think are ready to drop. Intermediate negative conditions for swing trading if you're a holder or an option trader for the next, let's say, 4 to 8 weeks. And these are the stocks: Square, Nike, Netflix, First Solar, Twitter, and Tesla, likely to move the market on the downside for the intermediate term. We rate them as strong sell.